Hey guys, welcome to another video. So, in this video, we are going to discuss about the financial model, like how the financial model works, and what is the purpose behind the making of the financial model, and what is the easy way to make a financial model for any company that is good for enough like that. So, let's start with the video. So, financial model is a process of creating a summary of a company's expenses or the earning in the form of a spreadsheet that can be used to calculate the impact of the future event or the decisions. Let's say financial model has a many uses for a company's executive, whether they are using this for the startup funding, apart from that merger acquisition, leverage buyout, and IPO valuation. So this is how the financial model works. Generally, a financial model has a analysis most often used for analyze or anticipate the how a company's stock performance might be affected by the future events or the executive decisions. So let me discuss about the 10 types of financial model here. So these are the financial model where we can discuss about the lot of things. Let's say first one is a three statement model. So this is how it works. Let's say three statement model is something like that that include the three statements. It's the P&L, balance sheet, and the cash flow. And on the basis of that, you are providing the financial snapshot of a company and the future of the company, future prediction value of the company. Then we have the discounted cash flow model, and on the basis of discounted cash flow, we will define the valuation of the company on the basis of current cash flow of a company, how the potential future cash flow will be. Like what is the value of the future cash flow on the basis of current cash flow. So this is how the DC evaluation works. Then we have the merger model. Let's say this is based on the merger acquisitions of anything, and let's say you have the company A and another time you have the company B as well, and you want to merge both the company. So in that case, we'll use the merger model. So merger model is something that define the things of the company on the priority basis, and apart from that, merger model affect the company in the different way. Apart from that, we have the leverage buyout model. Let's say this is something like LBO model. We generally use this in the real estate transactions. Let's say you have the cash balance of the 25% and you have the debt balance of the 78% or the 75%. So this is the generally ratio for the merger acquisition or the LBO model for the real estate transactions. We can't put the too much amount in the cash for the real estate transactions. That's why this is called the leverage model. After that, we have the initial public offering model, IPO model. If any company want to go public and they want to value their business for the red herring prospectus, so that's why this model works. This is based on the different parameters of the company, and apart from that, this is how the things will work for the different companies of the model. Then we have the sum of parts method, or this is something like that. Let's say you have the different division of the business and you want to value your business for a one thing. Let's say you have the three divisions in the business. One is hospitality, another one is the manufacturing business, and the another one is the electronic business, and you want to value for the manufacturing business. So this is how the sum of parts method work. So you only take the part of the company and value this on the basis of different methods. So this is how the sum of parts method will work. Then we have the consolidation model. So this is generally for the company that have the n number of the branches in the another countries or the in the different countries. So in that case, you use the consolidation method. You console the all the branches of the company and you make as a one branch. So this is how the consolidation work. So this is not a standalone, this is a consolidation model. So this is a valuation of the all the branches of the company at the one go. Then we have the budget model. So we define the budget of the company versus actual performance of the company. So this is a comparison between the budgeted versus actual model of the company. So this is how the things work. Then we have the forecasting model. The forecasting is suggested by the name. This is the forecast for the next 5 to 10 year, and this is how the things will work. So forecasting model is define the number of transactions on the different parameters. So this is how the forecasting work. Then we have the model of option pricing. This is based on the derivatives and the trading analysis, and we generally use this for the call and put options, and this is how to define as a your predictions or the prediction parameters of a stock company. So that's how the model of the option pricing work. So these are the types of the financial model and how the things will work. So let me discuss about the type of the financial model now, and let me discuss about the use of the financial model and how a financial model work. So this is the index of a financial model. So this is a valuation summary, executive summary, financial statement and ratios like income statement, balance sheet, cash flow, and the ratios, etc. Then we have the financial statement drivers, IS driver or the BS drivers. Then we have the valuations like income approach, cost of capital, and the COC working. Then we have the market approach, is the transaction multiple, transaction multiple workings, and apart from that, financials, public compliance analysis, public comparable companies, benchmarking, and the list sheets, etc. So let me go on the valuation summary. Let's say I'll click on this and we get the summary of that. It's an enterprise value on the basis of income approach, and this is on the basis of market approach, and this is weighted average enterprise value or consolidated book value. Then we go on to the executive summary. Let's say this is the executive summary of any company. Let's say it's a summarical of the things. So this is the KPIs, like number of the SKUs, PN Fit and Essentials, Good Life Nutrition, Ketogen, Organ Skills, etc. So these are the products of the company, and apart from that, this is the actual monthly value, and this is the projected value of a company. So this is how the things work. Then we have the revenue sheet. So we have the revenue segment from the different businesses of the company or the different segments. So we define this on the basis of valuation of different parameters. This is the actual value, and this is the projected value, and this is our income statement IS. So this is the IS. So this is how net revenue, gross profit, EBITDA, EBIT, PBT, PAT. So this is how the things will work in this. Then we have the another one. What is that? So this is the IS for IM, and this we have the balance sheet. So this is the balance sheet of a particular company. In the next video, we are going to discuss about the charts, valuation summary, financial model transactions, and apart from that, IS drivers, TM working, ratios, so everything. So if you need this template for the your working, you can comment, you can write in the comment section, and apart from that, you can also put your mail address and the city and the name in the comment section, or I'll share the Google form link for that. So I'll mail you the model with the more templates. So let's meet in the next video. Stay tuned for the more content. We will keep the full financial modeling or the investment banking lectures on the channel. Stay tuned and subscribe the channel and like the videos.